So today, coming into today, we knew that the area that we would need to watch would be that 200 period moving average to see if price could indeed hold the 200 period moving average, which coincidentally is around the major dime area of 106. So that area did hold. There was a break below it, but it did not come down to the minor quarter that is below it, which is 105.75. So with that, there was a bounce here at this 106 area. And with this bounce at 106, we do have the dollar nicely consolidating. Again, it is so eerie how all of this stuff actually works out, because if you are paying attention, very close attention, what you'll notice is the same exact area that we got consolidation in before any of this, any of the news came out. It's the same area that we're consolidating in now. So again, this is a net zero gain as to the rally and then the fall. There nothing changed. Literally nothing changed. The same exact area of consolidation is the same exact area that it's in now. So again, for this one, you can take both sides of the trade idea. The reason why you can take both sides of the trade idea is what we talk about with all of our other ideas. Again, moving average going almost immediately sideways here for the 100 period. And then for the 200 period, almost going immediately sideways as well. We do have major news coming out tomorrow for the dollar. We'll see how the dollar responds to this news, because we do have average hourly earnings, non-farm payrolls, and ISM services, PMI numbers. Those reports are expected to be dropping. So we are expecting non-farm payrolls to drop about 40%. We are expecting our average hourly earnings to drop as well. And ISM services PMI numbers are expected to drop as well. So with these numbers dropping, that would be bearish for the dollar going into the weekend. But again, there shouldn't be any excessive selling. Just should be like a normal sell. The reason why I say that is because of the fact that again, the trade already is a net zero trade. So with it being a net zero trade, there shouldn't be any excessive sell-off that takes place. If there is an excessive sell-off that takes place, that excessive sell-off is saying what is to come. Because again, one of the things that we do know is that the area that we're in right now is usually in the month of November, where this area does indeed sell off. So if that sell-off is going to happen, we could very well see that sell-off start to begin. So that's something to be mindful of with the dollar, is that the sell-off could be starting, which is why when we see the GU and the EU ideas, we see both of those creeping up. Again, the GU idea, we've been talking about this one over inside Discord, trapped inside of both this 100 and this 200 above. And so with the 200 being above, the 100 being below, as well as all the rest of moving averages, and this one holding on to that major dime area of 122, if it does continue to hold on to this 122 area, again, this is something that can take off as it catches up to its 200 period moving average up against the dollar. We see the same thing for the euro. We talked about again how the euro bounced, how if it was able to get above its 200, how dangerous that would be up against the dollar. Again, it's still able to hold 106, and so it has been holding 106 now for the past three candles. And with it holding 106 for these past three candles, we also have it now seeking to close above the 200 period moving average. And now the next step is for it to, as it begins to sell off maybe a little bit or pull back a little bit, for it to continue to maintain all of these lower period moving averages. Because if it can continue to maintain 106 as well as these lower period moving averages on any pullback, that is going to be a sign of bullish strength for the EU idea. So for the euro up against the dollar, that is going to be a sign of bullish strength for that one. Again, we're seeing this continued pullback here, lost the major quarter area here. We also lost here the 100 moving average. And so these are very critical areas that are being lost. Again, we talked about this bounce that occurred here. And then with this bounce, though, again, at the 100 period and at the 150 mark, the thing that I said over inside of Discord is that it still has yet to break this 20 period moving average. Again, 20 period moving average, I call it the spoon. Because oftentimes when price is in between its moving averages, it acts like a spoon. If price is underneath, the 20 period moving average can scoop it up. If price is above, it acts as a spoon pushing down maybe a ball underneath the water or whatever the case may be. And so that's what we're getting currently with the 20-period moving average. The 20-period moving average is acting as resistance as it continues to push price down after the loss of the 20-period moving average here. So we had the fall, the collapse here down to the 150 area. After getting the 150 area, securing the 150 area, bulls sought to fight back, but were stalled out at the 20-period moving average. Again, this is what we're looking at for the GJ idea. Again, pushing up, seeking to grab this minor quarter area. Again, above all moving averages, 100 is getting ready. It's overlapping, so it's getting ready. I said over inside Discord that the 100-period moving average is getting ready to cross up the 200-period moving average, as well as with the EJ idea. Again, all moving averages syncing in unison, seeking to push up to that next major area of 160, and we'll see how it responds at that major quarter area of 160 after having held for the past 3 candles this minor quarter area of 159.75. And so again, we continue to look at this, examine these ideas together, and we look forward to trading these ideas together with you guys tomorrow.